welcome everybody. Thank you very much for coming out tonight to Financial Aid Night. Firstly, my name is Matt Mulhern, work with a company called College Aid Pro. And as you can see, our mission is to help end the student loan crisis by empowering families to shop smarter for college, right? Look, I've been doing college financial aid advising or college financial aid consulting for over a decade. This is my 11th, maybe 12th year, kind of years blend together, right? But I've been doing this for quite a while. And when it comes to college financial aid, there's just a lack of information out there, and more accurately, a lack of accurate information. And we as a country, we as high school families are just not doing a good enough job of putting our families and really our students in a position to send them to schools that are great fits for them, but also that makes sense financially. And that's quite frankly the hardest part of this process. The goal is to send your daughter to a great school that they're super excited about, but also send them to a school that makes sense financially, right? And to marry those two things. So hopefully here tonight, if I do my job, by the time we're done in about 3 hours, you're going to have a much better understanding of how the whole process works. And just kidding, right? Just kidding. Before everyone starts hitting the exit button. No, listen, we're going to do this in a quick hour, right? Time's going to fly. You're going to have a bunch of fun. And I say an hour, honestly, probably an hour 15, hour 20, sometimes tell stories to illustrate the point. So it might go a little bit over, but it's going to be right around an hour. And hopefully by the time I'm done, you have a much better understanding of how the whole process works, right? From a high level, and give you guys the tools and the resources to utilize for the next 6, 7, 8 months before you have to submit a single application, to be able to understand, one, how much are these colleges actually going to cost? And more specifically, how much are these colleges actually going to cost for your family, right? As you'll learn, the sticker price is misleading, right? Most families don't pay the sticker price, or I should say most families, if you go to a classroom in a college, every kid in that classroom is paying a different amount for that school, right? So I got to try to demystify that a little bit, try to help you understand how that works. And then, so firstly, I'm going to give you the high level, how the process works, what aid's available, and then give you some tips and tricks and strategies for when the time comes to fill out the financial aid applications, right? What strategies do you want to be implementing? And then give you some tools and resources, what you can be doing now, right? How can you start preparing yourself starting tonight, moving forward, so you put yourself and your child in the best position possible, right? A couple housekeeping things before we move started. Firstly, this is being recorded, right? So we are being recorded. Everyone who registered here tonight will get an email tomorrow with the recording and the slides. And because we value the relationship with Eleanor Roosevelt and the high school, you get a free 20-minute consultation with myself to talk about your family specifically, right? Kind of tonight, we got to talk kind of high level about how it works. Can't necessarily answer any specific questions. However, understanding that every family situation is different, you will be afforded the opportunity to arrange a consult with myself and run your specific family situation by you. Just FYI, and I'll talk about this more. That's if you go to our website, collegeaidpro.com, you're not going to see that available. It's only to you guys. It's only offered to you guys tonight here because, again, we do value the relationship. You guys have a great high school there, wonderful guidance department. In fact, I was there in person during the spring, and we had a great time. But so it will be recorded. You will receive this tomorrow, so you can watch it as many times as you want. Right? I'm sure everyone's going to want to watch it more than once. But if you have to cut out early, miss a part, whatever, you're going to get the recording tomorrow, and you'll also get the link to set up a 20-minute call with myself. Now, questions are encouraged, right? Fire away. Any questions that you have, feel free. Make this as interactive as possible. As entertaining and witty as I am, it still is college financial aid, so it may be a little bit dry. So I absolutely encourage you to ask questions. Do me a favor, right? Do me a favor. Don't use the chat box. When you ask the questions, use the Q&A, right? If you use the Q&A, they'll be recorded, and we'll be able to see them. Moving forward, you can be anonymous. You don't have to use your name if you don't want. That's 100% fine. But I ask that you do use the Q&A for any of your questions. It'll just make it easier on me. And then the other thing, and I'm not going to hold you to this, to be honest with you, but if you can, stick to the topic at hand. Whatever we're talking about, whatever slide we're talking about, try to keep it to that question. Although, whatever, fire away. We'll do the best we can to answer any questions. Okay, so let's dive in here. All right. That's me. So my name again, Matt Mulhern, College Aid Pro. That's my email, mattm, collegeaidpro.com, and there's my cell phone. Again, I'll send you a link tomorrow where you could arrange a 20-minute free consultation to talk about your specific family situation. So where do we start? Again, mycap.collegeapro.com. When you registered, you probably got a follow-up email giving you an opportunity, an invitation to set up a free account on our website. I'm going to talk about this in a second. I'm going to show you what this is about. If you already set this up, great. You could pull your own up when I pull up a sample account, or you can go ahead and make one now. Again, completely free, but I'm going to show you how powerful that tool is going to be in a second. All right, so what's financial aid all about? All right, what's financial aid all about? What's available here? When we apply to college, what is actually available? What money is available for our family? Right? So there's actually 3 different pools of money that are available. As you can see on the side here, it's need-based grants, right? Need-based aid, merit-based scholarships, merit-based aid, and then what we call self-help aid, the third one, right? So self-help aid is what I like to say least helpful, right? Self-help aid is least helpful. Self-help aid are loans and work study. That doesn't actually lower your cost, right? So the self-help aid is not what we're going to focus on here tonight, right? I'm going to assume that the majority of you guys are class of 2024. What I want to help you do here tonight is understand the process and actually lower your cost, right? I want to get your sticker price down as low as possible. I'm sorry, I want to get your out-of-pocket cost down as low as humanly possible. Trust me when I tell you the loans are there, they're available. Even with my current senior clients, we haven't even started talking about loans. The loans will be there, they'll be available. We'll have more webinars on loans. Don't be focused on the loans right now. Your focus now should be on these other 2 pools of money, right? This is the free money. This is actually going to reduce your out-of-pocket cost, right? So it's need-based aid and merit-based aid, right? So these 2 are opposites, and let me explain to you what they are. So merit-based aid here is intuitive. Everyone gets, everyone kind of understands, right? Merit-based aid is a scholarship, right? Merit-based aid is scholarship money, right? It's all about the student. Merit-based aid is all about the student, right? Your son or daughter applies to a school. The school says, we really like this kid, right? We want to offer them a financial incentive to come to our school, right? A merit-based scholarship, all about the student, SAT, GPA, extracurriculars, basically their resume, right? If they're an athlete, if they're an artist, they're a musician, their academic profile, your student profile. So that's merit-based aid. Now, the one caveat with merit-based aid, which a lot of families don't understand, is not every school offers merit-based aid, right? For example, the Ivy Leagues, Harvard, Princeton, Yale, they don't offer merit-based aid. You cannot get a merit scholarship to Harvard, right? They don't exist. And there's a number of other schools like that. So again, merit-based aid is all about the student, their academics, and understand that not every school offers merit-based scholarships. The other type of aid that's available, and we say these 2 are really opposite, is need-based financial aid, right? Merit-based aid, everyone, like I said, intuitively gets and understands. My kid applies to a school, the school likes him, they give him a scholarship. Okay, how about need-based aid, right? How do I know if I'm going to qualify for need-based aid? And if I am, how much? Need-based aid is all about the family's financial profile, right? Need-based aid is all about the family's financial profile. It's why you fill out the financial aid applications, right? Namely the FAFSA, which most of you have probably heard of. We also have the CSS profile, which we're going to talk about in detail in a little bit, right? So need-based aid is all about the family, right? So you have merit-based aid, which are scholarships, merit scholarships based on the student, and then need-based financial aid, which focuses on the family's financial profile, right? So those are your 2 vehicles to reduce your costs, right? To reduce your out-of-pocket costs. So again, everyone kind of gets and understands merit-based aid. I'm going to talk about it and how to put yourself in best position for it in a few slides. But right now, I'm going to walk you through the details of need-based financial aid and how schools determine if your family is going to be eligible for it. And if you are, how much you're going to get. And before some of you might start rolling your eyes and say, I'm not going to qualify for need-based aid. You might be right. I'm not telling you you're wrong, but telling you from experience, many families throw up their hands and say, I'm not going to get need-based aid, and they're wrong, right? Let me walk you through the details of here just so you get an idea, so you get an understanding, right? So when it comes to need-based financial aid, every college in the country uses the same formula to determine your family's eligibility for need, right? So they use this equation here. It's COA minus EFC equals need, right? So let's break that down together. So the COA is that big, scary sticker price, all in cost, room, board, tuition fees, your all in cost, right? 30, 50, 70, some schools upwards of 90,000 bucks. right? That's the COA, that's the sticker price. They then subtract your family's EFC. Guys, if you leave here tonight understanding only one thing, let it be this, the EFC. It's that important, right? The EFC stands for the expected family contribution, right? The expected family contribution. It's an actual dollar amount that is assigned to your family. And it's basically the minimum amount that a college thinks that you're going to be able to pay, right? If you've ever submitted a FAFSA before, if anyone's ever submitted a FAFSA, you input the student information, you input the family's finances, your income, your assets, you click submit. Congratulations, your FAFSA was submitted. If you go and look, they'll show you your EFC is, and they'll show you, usually starts with 3 zeros. That's why some people get confused, but they'll show you that number. That number is vitally important, right? It's vitally important for better or worse. If it's going to be really high or really low or wherever it's going to be, you want to have an understanding of what that EFC is going to be, right? Because for need-based aid, here's what the school does. They take their cost of attendance, they subtract your family's EFC. That they subtract those two numbers, and that equals your eligibility for need-based financial aid. Now, the reason we say your eligibility for need-based financial aid is because just because you're eligible for need-based financial aid at a school, right, doesn't necessarily mean you're going to get that. Why? Because, and this is a very important concept to start understanding, every college is their own business, right? And they all do business differently, okay? So some schools, if you're eligible for $30,000 in need-based aid, they will give you all $30,000 in grant money, right? So let me just run a quick scenario by, and I'm going to show you on our software. I'm going to illustrate this in more detail, but real quick. So say you're applying a sticker price school, $80,000. Your family's EFC is 30, right? They go 80 minus 30, you're eligible for $50,000 in need-based aid, right? A school like NYU or Columbia, they need 100% of need-based financial aid. Both of those schools are going to give you $50,000 in grant money, right? Need-based financial aid. Essentially, at those two schools, you're going to pay your EFC. However, not every school does business like that. And I like to use Penn State in this example. And again, it's not to vilify Penn State, but it's just to explain to you how they do business, right? So Penn State out-of-state cost all in is $60,000, right? So Penn State goes 60 minus 30, right? So at Penn State, you're eligible for $30,000 in need-based financial aid, right? How much is Penn State going to give you? Zero, right? They're going to give you $0. They're going to say, go take a loan. They're not going to give you any need-based financial aid. Why? Because that's how they do business, right? So even though at Penn State, this hypothetical family is eligible for $30,000 in need-based aid, that doesn't mean they're going to get it, right? And so that's why a lot of the times families, even who've already been through this process, right? If you send a kid to Penn State, even if you had a $30,000 EFC, you say, I'm not going to get any financial aid. Not true, right? There's a ton of schools where you'd get tens of thousands of dollars in need-based aid, right? It just depends on what schools you're applying to. So I always like to say need-based aid is not binary. I will get need-based aid or I won't. This process is a very family-specific process, right? What's your EFC? And then it's a very school-specific process. What school are you applying to, and how do they meet need-based financial aid, right? As you guys can start to see, it's not easy, right? It's not an easy process. And the natural questions that arise during this slide are, one, how do I determine my family's EFC, firstly? And then two, once I determine my EFC, how am I supposed to know how schools do business, right? Like I said, I've been doing this for over a decade, and answering those two questions was not easy for families, right? So what we did, we created a software. Essentially, the foundation of that software was to answer those two questions, right? It's called College Aid Pro, or it's MyCap, right? On our College Aid Pro website. And what it does is basically answer those two questions. So again, this is my hypothetical family here, right? Matt Jr. So you have your EFCs up here, and I'm going to talk about the different EFCs. There's actually 3 different types of EFCs. I'm not going to get into that right now, but this shows you your EFC. Right? In the profile up here, I put in my family income, assets, number of people in the household, and this software automatically shows me my EFC. So when you go to submit the FAFSA come October, you're going to get a number very similar to this number, right? So you just by utilizing this free software, you're going to know your EFC. You can know it tonight, right? And so how do I then utilize that number? Okay, so now I put in my 3 schools, right? This is just a random sampling. I mentioned NYU, and here's what I want the takeaway to be. The sticker price is not the determining factor of what you're going to pay at a lot of schools, right? So we take NYU, we look at it, we say, oh my goodness, it's $85,000 a year. That's crazy, right? But for this family, right, they're going to pay $32,000 a year, right? Why? Because NYU is going to give this family $53,000 in need-based financial aid, right? So for this particular family, they're basically going to pay at NYU very similar to what they're going to pay at Binghamton, right? Very similar price, very similar cost, right? In-state Binghamton. Binghamton gives them a couple $1,000. However, like I said, and just happens to be the school that I used before, right? So Penn State, right? I have a 18,000. Let's round it up to make the numbers round. Say my EFC is 20,000. Penn State costs 60, right? They go 60 minus 20. At Penn State, I'm eligible for $40,000 in need-based aid, right? But are they going to give me any need-based aid? No. Why? Because that's how they do business, right? So you can see that for this family, right, the $85,000 NYU blows away, is literally half price of the out-of-state public school, right? Whereas basically the very similar price to the in-state school, right? So again, the takeaway here is the sticker price for most families is not the most important factor of what you pay, right? It's about one, what's your EFC? And then two, what schools are you applying to? How do they meet need-based financial aid? How much money can you expect to be given from that school? So we're going to come back to this. We're going to show you a few other things, but that's the foundation there of need-based financial aid, right? With the EFCs, et cetera. So anyone with any questions related to that? Yeah. So how do you find out if a school provides need-based financial aid? Good question. So here's what I'll tell you. Schools that provide 100% of need-based financial aid, they scream it from the rooftops, right? So it's pretty easy to find schools that meet 100% of need-based financial aid. The short answer to that is open an account on our software, right? And that'll show you exactly. And just real quick to answer that question, you can see if you go to our software and you click here, you come down and you can see if you go to financial aid, here's the percentage, right? NYU meets 98% of need-based aid, so almost 100%. It's now schools that don't meet 100% of need-based aid. I always like to use Emerson, right? Emerson competes with BU and BC and Northeastern, those type schools. It should be more generous, right? But it meets like 70% of need-based aid. I might be off on that, but it's not. It's much less than those other schools. Do you think Emerson is screaming from the rooftops that, hey, we only meet 70% of need-based aid, right? Of course not. You think Penn State is out there saying, we don't give any need-based aid, right? Right? Look, these colleges are businesses, right? Is it easy to find how much need-based aid a school gives? Not necessarily. And again, that exact question, Carolyn, is why we created the software, right? That question there, one, how do I know my EFC? And two, how do I find out what the school provides in need-based aid? That's why this software exists, right? That was the foundation of why we created this. Okay. Yeah, so I'm going to talk about the three different types of EFCs in a little bit. So that again, the EFC is based on what colleges think you can afford. I'm going to tell you, so if I don't answer that question in the next couple of slides, come back to me, but I'm going to tell you what kind of the EFC is made up of, and then you can see, okay? All right, so that's the foundation there. So hopefully you get an understanding. And again, if you take away one thing, one is that, wow, I really like this presenter. He's very good. And then two, EFC, right? That's such an important number. And here's the other thing. Even if you had $100,000 EFC, right? You want to know that too, because then at NYU, you are paying $85,000. At Columbia, you are paying $90,000. And I'm not telling you not to do that, but I'm also telling you no going in, that's what the financial expectation is, right? All right, so what should we know? What should we know about our EFC? Allie, what's up? How are you? Yeah, Miss Allie Clark. Wonderful. Set this up. Thank you very much. Thanks for being here tonight. Okay, so what do we want to know about our EFC, right? What do we want to know about it? So right here, this slide, I'm going to tackle income on the next slide, right? So right here, we're just talking about assets, right? We're just talking about assets. I'll cover income on the next one. So the lowest hanging fruit here, I'm in this first box right here, top right. Parent assets versus student assets. So ideally, right? Ideally, when you sit down in October, November, December to fill out your financial aid applications, ideally, you do not want any assets in the student's name, right? I'll say it again. Ideally, you don't want any assets in the student's name, right? Why? Here's why. Because any asset that the student has is factored into your EFC at a much higher percentage than an asset in the parent's name, right? So in other words, $20,000 in the student's name increases your EFC much more than $20,000 in the parent's name, right? They just take they take a much higher percentage of that 20,000, okay? So most times you don't even have to do anything. It's just understanding the rules, right? If your son or daughter has $5, $10, $20,000 in a local checking or savings, right? It's a part-time job, birthdays, bar mitzvahs, whatever. 9 times out of 10, your name as a parent is already on that account, right? It's a joint account because they were under 18 when it was opened. If your name and social as the parent is on that account, it is a parental asset, and that's how it's supposed to be reported on the FAFSA, right? Again, this is all about, we want to lower our EFC as much as we can, okay? So if you have a joint account, it's a parent asset, and that's what you want. Again, why? Because parent assets are factored in at a much lower percentage than student assets. How about 529s, right? 529s, guys, I see this mistake every year, right? It comes March, April, May. People reach out to me, Matt, we did the FAFSA, we didn't get as much as we wanted or we expected. Did we do something wrong? This is the first thing I always look at, right? 529s. 529s are very often, and honestly, it makes sense, but are very often reported incorrectly. They're very often reported incorrectly as student assets. 529s by rule are parent assets, right? The student's the beneficiary. It's being used for their education, yeah, but the parent is the custodian of the account, the owner of the account. The 529 gets reported as a parent asset. If you did a great job, you saved $100,000 in a 529, right? And then you report it as a student asset, you're going to increase your EFC dramatically, right? Your EFC is going to shoot through the roof. And not only are you filling out wrong, you're inadvertently costing yourself thousands of dollars in need-based aid, right? So again, 529s are parental assets, and that's what you want by rule, right? Everyone has a 529. They're a parent asset. If you have a grandpa with a 529, tremendous. It doesn't go on the financial aid applications. Why? Because it's not your asset as a parent. It's grandpa's asset, right? So again, don't make that mistake with 529s. 529s are parental assets by rule, right? Here's the second biggest mistake I see every year, right? So what's an asset, right? What is an asset for financial aid purposes? It's basically everything but, right? And the but is usually a good thing for most families. Everything but qualified retirement accounts, right? Qualified retirement accounts do not go on the FAFSA, right? So your 401k, 403b, Roth IRA, 457, any qualified retirement account does not go on the FAFSA. Again, a very common mistake that is made. On the FAFSA, they ask you 3 questions: the value of your cash savings, the value of your investments. I cannot tell you how many times I look at a family's cash value of investments and it's whatever, $400,000. I say, okay, what's this $400,000? That's my 401k. Okay, not only did you fill out the form wrong, right? You inadvertently shot your EFC through the roof, right? And listen, there's not many guarantees I could make when it comes to college financial aid, but here's one, right? If you report your 529 as a student asset or report your retirement account as an investment account, there's not a single school in the country that's going to call you up and say, oh, Mulhern family, oh, that $400,000 that you reported, is that a retirement account? Oh, it is? Yeah, let us change the FAFSA for you. We're going to lower your EFC and give you more money. Guaranteed will not happen. So up to you to know what goes where. Everything else is fair game when it comes to assets. I'm going to talk about houses in a second, but everything else liquid is fair game. Cash savings, bonds, brokerage account, right? That's all fair game for the EFC calculation. But anything in a retirement account is off the table, okay? And I'm going to get to houses in a second. How about debt? Is debt considered? I have families come all the time and say, Matt, we have 4 kids, 2 car payments, our property taxes are through the roof. We live in New York. The cost of living is through the roof. The state taxes through the roof. We have credit card debt. Unfortunately, none of that's really going to be a factor, right? Any consumer debt, as the schools like to call it, is not a factor and will not reduce your EFC and will not be a mitigating circumstance for a school to consider. However, if you do have some mitigating circumstance that you would like the school to consider, if you've ever filled out a FAFSA before, it's just numbers, right? They don't give room for explanation or context or circumstance. it's up to you and go talk to the financial aid office and let them know of what your situation is, right? Things they might consider if you care for an elderly parent, if you have significant unreimbursed medical expenses, right? Care for a special needs child, some of that nature. Those are things that schools will take into account. If you're paying high school tuition for another kid, grammar school tuition for another kid, those are some schools will take that into account. So again, a school may or may not take it into account, but it's up to you to let them know, right? Again, you'll see when you go to fill out a FAFSA, if you never have, it's just your numbers, right? It's just your numbers. You have to be proactive in letting them know your individual story. That's something that you think works in your favor. Okay, so how about houses, right? Let me just check the questions real quick. What do we got? Donna, EFC determined by filling out the FAFSA. I'm going to answer that question right after I get to the houses. ED asked me later. Okay, good question with retirement accounts. Now, that's one of the FAFSA changes coming. Yes, the presentation is being recorded. You'll get it tomorrow. So the question is, while they don't count what's in the retirement accounts, they do seem to count what contributions you make in the years back into your income. Correct. However, and I have a slide in a little bit about the FAFSA changes coming. So say you have $400,000 in a 401k. That $400,000 is off the table. However, if you fill out the FAFSA this year, let's say they used the tax year 2021 and you made a $20,000 contribution, they take that $20,000 and tack it back on as untaxed income. Completely correct. The person that made the statement there, anonymous. However, there's a big FAFSA change coming. If that $20,000 for the class of 2024, this is one of the pros of the changes. If that 401k deduction comes right out of your paycheck, that will no longer be tacked back on as untaxed income. So in 2022, which I'm going to talk about in a second, whatever pre-tax contributions you made to a 401k or 403b, they will no longer be tacked back on as untaxed income. So you're right in saying that they do tack it back on, but moving forward, they will not. That's one of the big changes coming. Okay, great point there. Great question. And so, yes, they do now, but they won't for the class of 2024. Okay, houses, right? And so this one always creates some confusion here. So your primary residence, right? So if you own a house and you're applying namely to private schools or considering some private schools, you definitely want to pay attention here, right? Your primary residence, the house that you live in. On the FAFSA, your primary residence is irrelevant. They do not ask you about it, right? There's no question on the FAFSA about your primary residence. However, right? There's always a however. There's 200 private schools in the country, right? Harvard, Yale, Northeastern, BU, Syracuse, whatever. 200 private schools in the country that, in addition to the FAFSA, require an additional financial aid application called the CS profile, right? The CS profile. It's a much more in-depth financial aid questionnaire. I'll have a slide on it a little bit. They do ask about your house, right? So these private schools are going to take into consideration your home. And what they're looking at when they look at your house is your home equity, right? What does that mean? It's the difference between what your house is worth and how much you owe on it, right? Hypothetically, I have a house that's worth $500,000. I owe $200,000. I have $300,000 in equity. These private schools take that $300,000 and add it into your EFC. It's not fair. I get it. I 100% get it, especially for families in the Northeast, especially New York City, especially in the last few years. I 100% get it. But that's part of doing business. Again, look, these schools are businesses, right? So here's what we advise, right? When you go to fill out the CSS profile, and they ask about your house, they're going to ask you 4 questions. What year did you buy your house? How much did you pay for it? And the 2 key ones here, what is it worth? And how much do you owe on it? So again, what they're looking for is equity. So we subscribe to what we call the IRS quick sale rule, right? And it's actually in the tax code. And it basically states that if you have to turn around tomorrow and sell your home under duress, the IRS understands that you may get 20% less than fair market value, right? So our best advice is to lower the value of your home using this calculation. So going back to my hypothetical, my house is worth $500,000. I'm going to subscribe to the IRS quick sale rule. So now I'm going to value it $400,000, right? I still owe $200,000. So instead of having $300,000 in equity, I now show $200,000 in equity, right? So it's still going to count, but it's not going to hurt as bad, right? And so why are we doing all this? We want to lower our EFC as much as possible, right? That EFC, the lower that EFC gets, the more dollars you're eligible for, the more need-based aid you're going to receive, right? Now, if you own a second property, an investment property, again, it's the same thing. They don't care about the cash flow, right? That's factored into your income. It's all about home equity. They're concerned with home equity. You can use this IRS quick sale to value your any other property as well, right? So again, your primary residence, irrelevant on the FAFSA. If you apply to the 200 private schools that require the CS, they're going to ask about your house. You want to lower the valuation as low as possible. Now, that being said, if you have a tax assessment, a Zillow, a neighborhood comp that's lower than that 20%, then do that, right? Get to the lowest reasonable level you can get. And I'll be honest with you, some people ask all the time, how do I evaluate? The lowest reasonable number you can get to, right? And again, usually it's this quick sale value, and that's just a suggestion, right? Get to whatever the lowest reasonable value is. Okay. All right, so that's assets, right? That's the asset section. So let me go back and address that EFC question in relation to the house, right? So let me show you the three different types of EFCs. So the three different types of EFCs, this is the federal EFC, right? So little mnemonic device, FAFSA federal. So this $18,000 is my federal EFC. This is derived singularly off the FAFSA, right? This institutional EFC, that it's $9,000 higher, right? Why? Because this institutional EFC is what the private schools use. Why is this higher? Is because this accounts for this family's home equity, right? So this institutional EFC is $27,000 because this accounts for the family's home equity that they're showing, right? That's why it's $9,000 higher than the federal, right? Because the FAFSA doesn't ask about home equity. The CSS profile does. And then there's a consensus EFC, which is used by about 33 schools, maybe 35, 33 to 35 schools in the country. It's Harvard, Duke, MIT, the elite schools, and they have a little bit different formula to calculate your EFC, with the main difference being they don't take into account home equity, right? So there are some private schools out there where home equity is off the table. But the majority of private schools that require the CSS are going to subscribe to this institutional EFC, and they will take this into consideration, right? Your home equity. So again, you want to reduce your home equity as low as possible. So that's the three different types of EFCs there, okay? All right, so that's assets, right? We covered assets there. Yeah, Marco, book a consult, we could talk about it. Okay, so now we're going to talk about income, right? So this was assets, now we're going to talk about income. So what income do they use, right? And what tax year do they use? So I'm going to assume that most of you guys are class of 2024, but it doesn't matter. No, you take, so what tax year do they use? What's your what they call the base income year? You take your son or daughter's high school graduating year, right? So class of 2024, you subtract 2. That's the tax year they use, right? So class of 2024, they're going to use your 2022 returns, right? Sophomore families, class of 25, you're right now in the middle of your base income year, right? They're going to use 2023. Freshman families, class of 26, they're going to use 24, right? Now, for better or worse, right? Unfortunately, if it's for worse, you don't get to choose the tax year. You have to use the tax year that is required, right? So if you're class of 2024, you have to use tax year 2022. If for whatever reason, 2022 was an anomaly, right? You sold property, you sold stocks and show a capital gain, you took an IRA distribution, you got severance pay, whatever, right? What you have to do, that's unfortunately a back-end process where you're going to have to appeal that, right? So you have to use 22 initially, then you get your award, then you go back to the school and go through an appeal process. And you basically say, we use 22 to determine our family's EFC. However, that doesn't reflect our family's current financial position. Can you adjust it? Blah, 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 and explain to them your situation. Will they? Depends, right? You know, what the situation is, one, and then how you present it, obviously, very important too, okay? But for better or worse, you have to use that tax year. What income do they use? It's line 11. It's the AGI, the adjusted gross income. So if you're looking at your tax return, look for line 11. That's the income that they use. And that's always going to be the case. So that's the key figure there. And then student income allowance. And a lot of the times this gets confused with assets. So if your student has $5,000 in assets, it counts against them, right? However, in tax year 2022, right, your son or daughter had a part-time job, whatever, and they made $5,000, $6,000, up to $7,000. So the student could make up to $7,000 before it affects their EFC, right? So if they made $10,000, that $3,000 is going to count towards the EFC. So the first $7,000 is off the table in income, right? Don't confuse income and assets. If they show $5,000 in assets, that will count. $7,000 or below in income does not count. And the tax year is the same as the parents, right? It's all 2022, okay, for the class of 24. Now, you have to do this every year, unfortunately, right? You have to submit the financial aid applications every year. However, let me give you some inside baseball. The first year is the most important, right? You have to get as much money as you can the first year, not only because that you want to pay as little as possible, obviously, but the first year basically sets your baseline. And the schools have budgets too, right? And if NYU says, okay, we give the Mulhern family $53,000 freshman year, they expect to give us $53,000 in the next 3 years. Now, you do have to submit the financial aid applications every year. However, and this is just from my experience, I can tell you, listen, these schools don't have unlimited manpower. All of their emphasis resources go towards applying seniors, right, to applying for freshman year. Once you're already there, basically the deadlines are pushed back and essentially it's pro forma. Listen, if your income jumps 100 grand, can a school adjust award? Absolutely. But if your income comes relatively consistent, you can basically expect to get what you did in previous years. Not to say that you can't go back and appeal to try to get more, but it's harder, right? Because again, they basically have you set, right? That's your baseline, right? So obviously you want to get as much as you can freshman year. All right, so that's income. Let's see. Just class of 24. Awesome. Okay. Yeah. So if you have twins, Charles, yes, every kid's their own entity, right? Each individual kid's going to have their own FAFSA. Absolutely. Yes. Doesn't matter if you have twins. And so I'll get into kind of the details of actually filling out the forms in a little bit, but short answer to that is yes. Okay. So that's the need-based financial aid, right? So that's need-based financial aid. So again, just circling back, highlights, again, understand what your EFC is, right? Very important, for better or worse. You want to know what it is, and then apply to schools that will give you the most aid, right? That's the name of the game. Now, what if you're a family? And listen, this slide doesn't only apply to people who have a high EFC, but what if you're not going to qualify for need-based aid, right? We're specifically addressing those families, right? No matter what you do, whatever tips, tricks you implement, you have an EFC of 100,000, 120,000, 150,000, right? There's nothing you can do. That is what it is. Again, first, what do you do then? The first thing that you want to do is understand that, right? You have to know that. You don't have to, but you want to know that going in, right? You want to know you have a $100,000 EFC. You are not going to get any need-based aid. Then you need to understand that a lot of schools, right? NYU, Columbia, Harvard, BC, BU, Notre Dame, Hopkins, Vanderbilt, for the most part, they only give need-based aid, right? So if you have a $100,000 EFC and you're applying to Harvard, Princeton, and Yale, you're paying the sticker price. You're not getting a dime. And again, that's certainly your decision as a family, but at least understand that, at least know that, right? So that's the first thing. Now, here's the other thing. Just because you have a $100,000 EFC, for most families, doesn't mean that you're in a position to start writing checks for $85,000 a year, right? In my experience, that's usually the case. So what do you do then? Again, the first part is understanding what the EFC is, understanding that need-based schools that only give need-based aid are going to cost you the sticker price. Then you have to go and find that other pool of money, those merit scholarships. You have to apply to schools that will give you merit scholarships. How do you do that? Easier said than done, absolutely. But again, to answer that question, it's part of the reason we devised this software, right? So you can see My College Aid Pro. I always, as an example, I like to use Clark, right? So the Massachusetts schools, right? Your son or daughter wants to go to Massachusetts. So you look at Clark, type it in, type the wrong university up in Worcester, right? So you go to Clark, you can see that Clark is a school that is both generous with need-based aid, right? But you can see here, so they meet 95% of need-based aid. That's very strong. But they also give merit-based aid, right? Percent receiving non-need merit to a third of their admitted students, right? So it stands to reason that the majority, or 33%, of the students that apply to Clark are going to get a significant merit award, right? On average, 18,000. But this year, I saw a lot of kids get 20s and 22s and 25s at Clark, right? And listen, Clark is just a proxy. But the point being, Clark's a school that gives merit, right? So again, if you have a $100,000 EFC or your EFC exceeds the cost of attendance, You have to identify schools that are going to give you merit awards, right? That's how you're going to move your needle. Again, easier said than done, but understand the concept, right? High EFC, your only discount is going to come via merit, okay? And again, not every school gives merit. It's something that I had a family that called me a couple of weeks ago. They had whatever, $120,000 EFC. They applied, they had an elite student, right? They applied to 4 Ivy League schools, and then they have applied to what they call 4 NESCAC schools, which is like Tufts, Bates, Bowdoin, Middlebury, right? I told them, you're going to pay sticker price, right? Why? Because your EFC is $120,000. Those schools only give need-based aid. So you applied to 8 schools that are all going to cost you 80,000 plus, right? That's what's going to happen. And again, look, even if you have a high EFC, that doesn't mean you can't apply to those schools. But my best advice is give yourself options. Give yourself options. And I tell this story just because it's pretty powerful. Going back a few years now, I had a family that was in a similar position, right? They had an EFC of $80,000, right? This kid's dream school was Brown, right? Brown, I want to go to Brown, and that's 100% fine. I worked together with them, and I said, look, firstly, we apply to Brown, absolutely. One, we don't know if he's going to get in, right? In the meantime, but if he does get in, they're not going to give you a dime, right? We know that going in, right? At the time, it only cost $60,000. It was only $60,000 a year, right? So Brown's going to cost you $60,000, right? So it's going to cost you $250,000. By the time they were done taking loans, et cetera, it was going to be well in excess of $300,000 to go to Brown, right? So we knew that. In the meantime, let's apply to some other schools that he's going to get merit, right? That are strong options that are going to get merit. You don't know if he's going to get into Brown. If he does, you can make that decision, right? So long story short, it came down to Brown. He got in. Congratulations. Awesome. Didn't give him a dime as we expected. He also applied to University of South Carolina, right? And listen, in a vacuum, is anyone picking South Carolina over Brown? No, but we're not in a vacuum here, right? For a lot of families, the finances matter. And for every family, or most families, the finances should matter, right? So University of South Carolina, this was a business kid, has a tremendous international business program, right? Kid was a very strong student. South Carolina offered him invitation to the honors program, right, which comes with its own better dorms, pick classes first, special research projects, et cetera. They also gave him what they call an out-of-state offset, right, meaning he pays in-state tuition, right? So basically, he was choiced against paying $60,000 a year for Brown, right, over $300,000 over 4 years, or going to South Carolina for $20,000 a year. The parents basically said, look, maybe we can do a year and a half of Brown, or we can cover the whole thing at South Carolina. You can graduate debt free, right? The kid is a senior right now at the University of South Carolina, doing tremendously well. In the end, honors program, international business, I'm going to graduate debt free. And so that family made that decision. And here's what I'll tell you. You don't have to make that decision, obviously. Do what's best for your family, but give yourself options, give yourself choices, right? And you can see here, especially if you have a high-end student and looking at those elite type schools, look at public school honors programs, because not only do they come, the perks of honors programs, they also come most of the time with a significant merit award, right? University of Pittsburgh, I had the same exact scenario for a client of mine this year, right? Basically Carnegie Mellon, which is basically need-based aid only, got in, super hard school to get into, got in, $80,000, whatever it is a year. Kids going to Pittsburgh for $25,000 a year, right? Same city. Again, even though they had $100,000 EFC, they were in no position to pay $80,000 a year. None. Listen, you don't have to pay $85,000 a year. You always have options to find a discount. It's just about understanding where you are, what your EFC is, and then applying to schools that will give you a significant merit award. And then here's the other type of school you could look at, even if you don't have that kind of elite kid where he's going to get honors programs and huge awards. Look at what we call value school. And we use James Madison here, right? Binghamton all in, roughly $30,000 thereabouts, right? Out of state, James Madison is like 40, right? I live in Jersey City. I'm in New Jersey. I went to the University of Florida, right? Go Gators. I didn't realize at the time, but that was essentially a value school. Out of state Florida was the same cost as in-state Rutgers at the time, right? Too long ago to even say, can't believe it's that long ago, but it was the same price essentially, right? Out of state Florida was the same as in-state, right? Florida State was like $37,000. And again, maybe it's a little bit more than Binghamton, but maybe your son or daughter wants to get out of New York, but you don't want to pay $80,000 a year, or you can't pay $80,000 a year, or it doesn't make any sense to borrow $40,000 a year to go there, right? Look, here's what I tell everyone. The finances don't have to be the end all be all of your decision-making process, but they should absolutely be a component, right? They should be a factor in building the school list and then making your final decision. So that's how you can find value and kind of the high level strategy that you want to implement, even if you're not going to receive any need-based aid, right? You have to target schools either on the lower end of the tuition spectrum, right? The value schools, or schools that will, right? Schools that will give significant merit money. All right, let's take a look. Yeah, good question. Do merit awards apply to all 4 years? They do, right? They do. And I think this might be the slide. Yeah, there you go. Yeah, yes, merit awards. So here's usually how you know you got a merit award. And listen, every school's different, so this is not across the board, but most schools, when they send the admissions letter, congratulations, you're admitted to the class of 2028. We want to offer you whatever it is, $40,000 over 4 years, $10,000 a year. It's for 4 years, right? Merit awards are almost always for 4 years. Again, obviously there's exceptions to every rule, but for the most part, it's over 4 years. And again, what is a merit award? It's a financial incentive, of an enticement for that student to attend that school, right? And again, it's going to be based on grades. It's going to be based on test scores. I'll tell you, test optional, we're in our 4th year now. Many more schools are giving merit awards for test optional. So do strong test scores help? Absolutely. Don't let them fool you. Test optional doesn't mean test scores don't matter. A really strong high school resume and going test optional, you absolutely can still get merit, right? Year 1 of that, right? When COVID first hit, very few test optional got merit. Why? Because colleges weren't prepared for it, right? They didn't know how to deal with it. But now for class of 2024, we're basically going to be in the 4th year of test optional, and most schools still offer it. Obviously, there are exceptions, but test optional, we could absolutely still get very strong merit awards, right? So that's the details of the merit. And again, how to use our software. And it sounds like I'm tuning my own horn, which I guess in some regard I am. But basically, you can click on any school and you scroll down like I showed you before. I'll go to one closer to home, right? We go to Syracuse. Syracuse is another school that's both very strong with need-based aid, right? So for this family, based on their EFC, Syracuse is $83,000 a year. It's going to cost them 36, right? 37, whatever. So you go to Syracuse and you scroll down, you can see financial aid. They meet 97% of need-based financial aid, but they also give merit awards to over a quarter of their students, right? There is merit available at a school like Syracuse. Then you scroll down, and again, these are not definites where if you have this, you definitely get this. But I actually had a kid last year and this year get this 1870 award, which is basically covers the tuition, and then you just pay room and board. Both of them were test optional, believe it or not. There are merit awards. So again, it's about understanding different schools do business differently. And again, it's tough information to find out, right? Let me check questions here. Yeah, anonymous with special needs and Cindy. Yeah, book a consult. We can talk about those specifically with you guys. All right, so again, merit-based aid versus need-based aid. Understand that every school is a different business. Some lean more heavily into the other. I showed you 2, Syracuse and Clark, that actually do both very well. They give very strong merit and very strong need. On the right-hand side are 4 schools that predominantly give need-based aid. MIT, Harvard, they only give need-based aid, right? How much you pay at MIT and Harvard is dictated by one thing and one thing only. What's your EFC? It's the only thing that matters, right? Northwestern, Notre Dame, do they give merit awards? Yes, but, right, and I'll throw BC, Vanderbilt, Hopkins, Duke into this. They do give merit, guys, but they give merit to 2% of their admitted students, right? And that includes athletes, right? So you got 85 guys on the Notre Dame football team, which makes up part of that 2%. So for all intents and purposes, Northwestern, Notre Dame, Hopkins, BC, right, Vandy, they give merit, but don't expect to get it, right? Don't expect to get it, right? Just because they basically don't give any. Why? Because all of their resources go towards meeting need-based financial aid, right? So again, fair expectation, you have a $100,000 EFC, you're paying sticker price at all 4 of these schools, right? You have a $20,000 EFC, you're paying $20,000 a year at all 4 of these schools, right? Like I said at the outset, you go to any one of these schools, every kid in that class is paying a different amount of money, right? And it's all predicated for these 4 schools, particularly on the family's EFC, right? And then on the left-hand side, you have schools that give a ton of merit, right? Give a ton of merit, right? Willamette, the Pacific Northwest, Case Western, which, excellent engineering school, Denison, which is like a private liberal arts schools in the Midwest, and then University of Alabama, right? Obviously, big Southern public school, Roll Tide. I've seen a ton of huge awards, basically a ton of out-of-state offsets at Alabama, especially over the last 2 years. So they're giving a lot of money out. Again, understand, I can't stress this enough. It's a very family-specific process. What's your EFC? A very school-specific process. How do the schools you're applying to do business, right? Okay, some of the money that's available, I'm not going to harp on this, but I just want to bring it to your attention, especially. Yeah, Donna. So merit-based aid is going to be contingent on maintaining a certain GPA. Absolutely. It's the same rule for need-based grants. Need-based grants is all family finances. So as long as the kid maintains enrollment, it's not contingent on a GPA. Again, grant money is all about the family's financial profile. The kid fails out, obviously, you don't keep that, but as long as the kid's in school, you keep the need-based aid money. Okay, so some of the aid that's available on the left-hand side is the federal aid. You have the Pell Grant for lower income families. And then here's some of the loans. You have the parent, and guys, like I said, this is that self-help bucket, right? The Pell is not, the Pell is grant money, but the PLUS and the federal direct student loan, those are student and parent loans. We're not going to harp on that right now, but just to be aware of, basically the student, as long as you submit a FAFSA, the student can borrow up to $27,000 over 4 years. Here's how it's broken out, right? 55, 65, 75, 75. This is guaranteed. If you submit a FAFSA, you could be Bill Gates' kid, you get this loan, right? You'll get it at every school that you apply to. State of New York, right? The state of New York has specific programs. You probably have heard of them in some regard. So here's the state of New York website. So New York, the two main ones in the state of New York are the TAP, right? So you fill out the FAFSA first, and then once you fill out the FAFSA, you then have to go and fill out the TAP application, right? TAP, Tuitions Assistance Program. That's a cutoff that can be used at any, obviously New York residents can be used at any school in New York. The cutoff for that is right around 80,000, although that's not a hard number, but anything over 80, you're probably not getting the TAP, depends, right? But it's right around 80. And again, it could be used at any school in New York. And then you fill out the FAFSA, then you fill out the TAP, and then for SUNYs and CUNYs, you have to fill out the Excelsior, right? And so I know it says Excelsior Scholarship, but the Excelsior is actually need-based. So if your AGI is $125,000 or less, you will get the Excelsior at any SUNY or CUNY. It's a little bit more than this. 55 is a little light. It's probably closer to 65, 7,000, depending on which SUNY or CUNY we're talking about. And it does come with some conditions. You got to stay in New York, blah, 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 whatever, if that's something you're interested in. But so there's the FAFSA. So for the state of New York, you fill out the FAFSA, then you fill out the TAP, then you fill out the Excelsior, right? You have to fill out 3 separate ones to put yourself eligible for all 3 of these. And if you make more than 125,000, you're not going to get them, right? 125 and above does not get the Excelsior. All right. So that's New York specific, obviously. Okay. So how do you actually apply, right? So no school is alike. Very important concept. If you don't submit a FAFSA, will you be considered for need-based aid? No, you have to submit a FAFSA to be considered for need-based aid. You must submit a FAFSA to be considered for need-based aid. Right? You have to submit a FAFSA to be considered for need-based aid. Excelsior, hopefully I explained that. All right, where and when with the FAFSA, we'll get to that in a second. Okay. All right, so how do you apply for financial aid? Number one, every school in the country, from community colleges to the Ivy League, require the FAFSA to be considered for financial aid. You must fill it out, right? When do you fill it out? So class of 2024, it's not even available until October 1st. Right. So even if you wanted to, you can't do it till October 1st, senior year. Right. So you have a kid that's a junior, you're not doing it to the October 1st, senior year. Right. So no school is alike. Very important here. Deadlines are paramount. Right. Don't miss a deadline. Now, the FAFSA becomes available October 1st. Doesn't mean you have to be the first one to submit it. I know there's a misconception where, it's first come, first served. That's not true. Right. That's not true. Every school has its own deadline. Right. So every school's its own business. They all have a deadline. So I hear all the time, what's the FAFSA deadline? That question doesn't exist. I guess it exists, but that question is irrelevant. It's the school I'm applying to. What is their FAFSA deadline? This process is school specific, right? So you have to figure out the schools you're applying to, what are their deadlines, right? There's no deadline in the country before November 1st. So if you fill out the FAFSA in the month of October, you're 100% fine. You'll qualify for every dollar in need-based aid that you qualify for, right? And that's only for early decision or early action, November 1st, okay? Again, every college requires the FAFSA. And guys, it's up to you to know who needs what by when. That's part of your responsibility as the applicant, as a parent, as a student, right? You have to get the applications, just like you have to get the admissions applications at the same time. Oh, and here's an important point. A lot of people, you don't do the admissions application, get admitted, and then do the financial aid, right? You do the admissions application simultaneous to the financial aid, right? You do them at the same time. So this is actually the FAFSA website, studentaid.gov. Again, accessible October 1st. Doesn't mean you have to do it October 1st, right? You don't get extra bonus points for being the first person to submit it. In fact, the first week, I don't even bother submitting it because this website's all jammed up. The earliest deadline in the country for any early decision or early action is November 1st, right? So be aware of that. So again, if you submit, no matter if you're applying early decision, if you submit anytime in the month of October, whether you submit October 1st or October 31st, you're in the same boat, right? So don't miss a deadline, right? Don't give the school any reason to penalize you. But as long as you meet the school's deadline, you're 100% fine, right? You're 100% fine. We talked about base income year for the class of 24. It's tax year 2022. Again, you don't have a choice or option with that. You have to go by that. Now, going back to the family with twins, in order to submit the FAFSA, every kid has to create their own FSA ID, right? So you have twins. Both of them are going to have to create their own FSA ID and password, right? It's not an ID number. It's a username and password that you have to create, right? So you have twins. Each twin is going to have their own username and password. Every FSA ID and password is linked to a social security number, right? So each one is going to have to do their own FSA ID and password. Each one is going to have to fill out their own FAFSA. You already sent the kid to college or you have a kid in college. They did the FAFSA already. Great. Your kid coming up that's a junior, they're going to have to do their own, right? They're going to have to create their own FSA ID and do their own FAFSA. Now, you also need a parent FSA ID and password. If you already, so for the guy with twins, right, you're going to have three. You're going to have two student and one parent. Could be either parent, doesn't matter. I'll talk about divorce situations in a minute, right? Again, if you already sent the kid to college, the kid in college already has their FSA ID. That's there for their FAFSA. The parent is going to have the same FSA ID, right? And again, you can, if you want, you can go and create these FSA IDs now. You don't have to, but I recommend doing it before October, just because the website is crazy. You know, write them down in a safe place. All right. So again, everyone's familiar with the FAFSA, but the CSS profile is, again, required by about 200 private schools. There's 5 public schools: UVA, Michigan, Georgia Tech, William and Mary, North Carolina, Chapel Hill. Those are the 5 public schools in the country that require the CSS profile. And then another 195 private ones that do. You go to College Board, right? So your son or daughter registered to take the SATs. That's their login for the College Board. Again, the FAFSA is pretty straightforward. CS profile is much more in depth. It's a much more in-depth financial aid questionnaire. Here's a double-edged sword to the CSS profile. Most schools that require the CSS profile are also much more generous with need-based financial aid, right? So they make you jump through some more hoops, but that's because they're much more generous, right? So double-edged sword there. We talked about home equity, right? They're going to use that institutional EFC, most of these schools, because they're going to account for home equity, right? Now, divorce separated, right? If you're in a divorce separated situation, let's understand the rules here. The legality of your divorce and separation is irrelevant, right? It does not matter as long as both biological parents are maintaining 2 separate households, right? So biological mom and biological dad live in separate places, right? Not under the same roof. You are in the divorce separated bucket for financial aid purposes, right? Or I shouldn't say mom and dad. If both parents are living in 2 separate residences, you're in a divorce separated bucket. Here's a big difference. So for the FAFSA, in a divorce separated situation, only one parent's information goes on the FAFSA, right? It's the custodial parent. Who's the custodial parent? They're actually changing the rule of who the custodial parent is for the class of 24. It's the parent that provides more support for the child financially. That's ambiguous. I said that right? I think so. That's not clear. There we go. So quite honestly, there's some gray area there, right? So on the FAFSA, only one parent's financial information goes on. For the CSS profile, the CSS profile is different. Like we said, they're more in depth. You're going to have to fill out the CSS profile with the custodial parent's information, but then the CSS profile is going to let you know that you also have to do what's called the NCP, or non-custodial parent application, right? So the FAFSA is going to give you an EFC based only on one parent. The CSS profile, you're going to have an EFC based on both parents, right? If you're in a divorce separated situation, for everyone, it's vitally important to understand and pick schools that will give you money. But honestly, in a divorce separated situation, you could thread the needle and take advantage of that. I recommend all of you taking advantage of the free 20 minutes and chat with me. But if you're in that situation, I definitely recommend it, right? And then business owners. The FAFSA is pretty straightforward. They ask the value of your business. If you have less than 100 employees, it's 0. The CSS profile goes into much more detail, right? They're going to ask you if you own a business, what the value of the business is. Do you own property? They just go into much more detail with business owners. And kind of like doing your taxes, there's a better way to answer these than not, right? But again, FAFSA required by every school in the country. You have to submit it. In a divorce situation, it's only the one parent. CSS profile required by 200 schools, and a divorced separated situation is going to be both custodial and non-custodial. Okay. Check questions. So some of the big FAFSA changes coming. Let's see. Okay, if you don't submit a FAFSA, will you be considered for merit-based aid? Most schools, yes. Most schools, yes. However, every school is different, right? Every school has different rules, guys. I can't stress this enough. Every school is their own business. So it's the exception, not the rule. But like NYU, you have to submit a FAFSA to be considered for merit-based aid. So every school is different. They all have different rules. So Peggy, high level, 90% of schools, no, you don't have to apply for financial aid to be considered for merit, but there are some that you do. Again, every school is their own business. They all have different rules, right? Correct. So if you live apart, you're separated, essentially, you're maintaining 2 separate households. For the FAFSA, it's only one parent who supports a child. Exactly. Yes. All right. Look, some of the big changes coming for the class of 2024. The Pell is going to be increased, right? The Pell grant for lower income families. The FAFSA is going to be simplified, although pretty straightforward to begin with, I think. So less questions. Okay. Child support is not treated as an asset. It's treated as an asset, not income, which is good because income counts for a higher percentage of EFC. So that's a good thing. And we talked about this earlier, but it's an important point. So any of your pre-tax retirement contributions that come directly out of your check are no longer factored into the FAFSA, right? So those are some of the good things. Also, I have a lot of cops and firemen that are clients, 9/11 disability or whatever. They get hurt on the line and they get untaxed income. Their pensions are untaxed because they're disability. That used to count, right? It no longer does. So if you have any disability pensions, that's off the table as well, right? Some of the cons. Here's the biggest con, right? And this is terrible. There's no 2 ways about it. And this, like talking the guy with twins, this one stinks for you particularly. But anyone with 2 kids in college at the same time. So here's how it works right now, right? So let's say your EFC is $100,000, right? And you're not getting any need-based financial aid at any school, right? Freshman year. But sophomore year comes and now you have a sophomore and a freshman. What every school did previously to this upcoming year is they said, okay, we still expect you as a family to come up with $100,000, but 50 goes to one kid and 50 goes to the other, right? They split the EFC in half, right? Which is a huge benefit for families with multiple kids in college. Families with twins, essentially they would get 4 years of split EFC, right? That's going away, right? So that's going away. That's ridiculous. It stinks. It's a terrible rule. I'm not joking when I say write your congressman if this is going to affect you negatively. I'm serious. I don't think anyone understands the ramifications of this, but I do from doing this for a decade. It's a terrible rule. It's a terrible rule change. And I'm sorry that it affects anyone that is going to fall into that boat, but that's what's coming. Now, it's a little more nuanced than that. Going back to the 3 EFCs with the split. So the guy with twins, and I apologize, I forget your name, Charles, maybe, if I'm getting it wrong, my fault. So here's what's going to happen. This federal EFC on the FAFSA, if you have 2 kids in college, right? So right now, this 18,000 would be 9,000 if you had 2 at the same time. That's not going to happen. So you're going to have a federal EFC of 18,000. However, this institutional EFC, right? This is still going to give you credit for having multiple kids in college at the same time, right? So like NYU, Syracuse, Harvard, Yale, right? Any school that requires a CS profile, essentially, they don't use the federal methodology. They don't use the federal formula. So the expectation is you still get credit for having multiple kids in college, right? So if you have twins, it's possible that one twin winds up at a school where you don't get a split EFC and one twin does. So obviously you may want to target schools that do, but just be aware of that. So it's a little more nuanced than just that EFC split is going away. It's going away for the federal methodology, the federal calculation. it's not going away for the private schools, a lot of the private schools, right? Basically any school that requires the CSS profile, right? So again, part of this process, a lot of this process is applying to schools that will give you the best bang for your buck. And if you fall in that situation with multiple kids in college, that's another factor you got to consider, right? So we created a petition here. And again, we'll send this to you tomorrow to try to get that rule change. I think we're up to 75,000 signatures. Hopefully it has some effect. I'm serious too. As the guy with twins, whoever else, write your congressman, call the office and just tell them this rule is crazy. We're trying to do student loan forgiveness to make college more affordable. This is making college a lot more expensive for a lot of families with multiple kids. Be aware there. We're trying to do our part. Okay, so appeal. And this is putting the cart before the horse a little bit for the class of 24, but I want to put it on your radar. Okay. All right, the new rule. Okay, good point. I didn't bring that up. So the new rule for custodial parent. So, right, like for the class of 23 and previous, for divorce separated situations, the rule is who does the kid live with 51% or more of the time, right? That's the rule currently. Who does the kid live with 51% or more of the time? The change is who supports the kid more financially. And again, let me tell you, that's what do you consider support, right? Like I pay the mortgage, I buy the food, mom pays child support, whatever, right? So there's a lot of ambiguity there, right? So again, you can take advantage of that, long story short, but that's the change. So it's going from who does the kid live with to who provides the kid more support. So that's the change. Yeah, so again, I don't want to talk about specifics, but yeah, so at BU, you should get your EFC split in a third, Charles. I recommend you talk with me. All right, so give you a quick timeline of events, right? So right now, you're putting your school list together. Again, use the software, try to understand your EFC, the schools you're interested in, what they cost, find schools that will be better bang for your buck, right? That's really what you should be doing the next 6 months. Then come October, you're doing the admissions applications, you're doing the financial aid applications, right? That's October, November. December, January, February, you start to get your awards. May 1st is, again, aside from ED, May 1st is one universal drop dead date. You got to decide what school you're going to. In between when you get the award and when you make the decision, you can go through an appeal. And we're doing this right now for the senior class. I've had some very successful appeals this year. 40 grand at Vandy, 35 at Columbia, a huge one, 35 or 40 at Occidental, which, listen, those are rare, but let me tip my own cap. You can appeal, right? And you can appeal successfully. Here's a 5 or 6 point plan of attack that you want to implement. And again, this comes after you get the award, right? You can't appeal an award you don't have. Bring some color, bring some background to your story. Right now, your file sitting in the financial aid office. They didn't read your kid's essay. They have no idea it's your daughter's dream school, that your son has wanted to go there for the last 15 years, right? They don't know any of that. They're just looking at your FAFSA, your CSS profile, your tax returns, your W-2s, just numbers, right? Tell them what's going on with your family. If you have some mitigating circumstances, now's the time to bring them to light. Ask for a specific award, show awards offered by other college. This is that leverage component, right? And when I help families, I'll give you a great example, right? When I help families build a school list, I had a meeting the other day with a client, right? Sacred Heart's their top choice. I said, listen, Sacred Heart's top choice, great. We're going to apply to Fairfield. We're going to apply to Quinnipiac. We're going to apply to St. Peter's University. All 3 of those schools are competing schools with Sacred Heart. Some of them are going to give you better awards. I don't care if your daughter doesn't want to go to those 3 schools. We want those awards to use as leverage to get more money out of Sacred Heart, right? So you want to have schools that compete with the top choice schools in order to use as leverage down the road, right? And again, that all starts with building a smart school list. So essentially, the pitch is Sacred Heart, you're number one choice, but this other school that you're competing with offered us whatever, $10,000 more. If you could bridge that gap we're in, right? Very powerful. But it all starts with making sure that you have some schools that compete with them, right? Harvard doesn't care what Sacred Heart is offering you necessarily, right? Or so Harvard doesn't care what University of Alabama gave you, right? So like you have to have schools. The easiest way to sort that through, what conference do they play in, right? The Ivy Leagues all compete with the Ivy Leagues, right? Alabama, South Carolina, Florida, they're on the SEC, right? And you narrow it down that way. That's the best starting point for that. Challenge expenses not considered on taxes. This one is high level. Long story short, especially if you own a business, I've seen schools and more recently where they add back in, like you take, just as an example, you work in construction, you write off your truck, right, for your construction business. I've seen schools take that truck deduction and say, oh, we think you drive the kids to school in that truck. We're going to disallow that deduction and add it back on as untaxed income, right? perfectly fine with the IRS, but these colleges make their own rules. So if you don't know to look for that, that's tough to go back with, right, and appeal. But that's something I see more and more colleges do. Again, that's particularly geared towards small business, self-employed. I've seen a lot more of that. So be aware of that. And then the last one's kind of be persistent. I had a family last year at Syracuse. They were in a divorce situation, very complicated, blah, 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 whatever. They gave the award and the kid was paying like 50 grand a year. And mom was basically on the hook. There was no way she could do it. We went back 3 and 4 and 5 and 6 times. We went up the ladder. I got the vice president of financial aid on the phone and basically explained to them the situation. Long story short, they basically increased the award by $25,000, literally allowed that kid to go to Syracuse, right? And basically this mom wouldn't take no for an answer. Thus, I wouldn't take no for an answer, working together with her. And we basically got an award. So the kid was able to go to Syracuse. And listen, I'm talking about huge numbers. Most appeals aren't that high, but even if you get $2,000, $3,000, $4,000, 9 times out of 10, they carry through for 4 years, right? So even if you got an award for an appeal for $2,000, right? That's $8,000 tax-free, that less you have to pay, right? So it's real money. And last one, most appeals are student-led, although it's financially driven, that's kind of ambiguous. But again, this happens after you get the award, right? So after you get the award, you go on the appeal, right? All right, so how are we doing time-wise? Yeah, I told you a few minutes after, but hopefully everyone's having fun. All right, so what should you be doing, right? What should you be doing now? Like I said in the beginning, one, hopefully you set up your free MyCap account where you can get a handle on your EFC and start to understand that, start to understand the schools, how they do business, what they're potentially offering you. And then again, if you go on our website, you're not going to see any of this free intro call. It's not available. It's only available to you guys because Ms. Clark does a tremendous job with the rest of the guidance staff there at Eleanor. And we want to offer you a free financial aid consultation, right? It's 20 minutes. I'm going to drop this. I'm going to use the chat. Actually, I'll drop a link in right here. Feel free. I'm not going to do it. Hold on. Let me grab it. So you're going to get this email tomorrow with maybe, let me see. You're going to get an email tomorrow with this link, but I'll give it to you now. You get a link to my calendar. You can see it there and take me up on a free 20 minutes, right? There's no downside to it. Ask me any questions. Obviously, every family's in their own specific situation, so you can run anything by me. I'll give you the lay of the land. Here's what you can expect. Here's what your EFC looks like, the schools you're interested in. Here's how they do business. You're barking up the wrong tree in terms of value. You want to focus on these type schools. You're looking at out-of-state Penn State. That's going to cost you $60,000. Out-of-state Maryland. That's going to cost you $55,000. Those schools don't get anything. You like those schools? Look at Delaware. Look at Vermont. Look at schools that will actually give you money, right? So there's a lot of strategy that goes into this. But here's what I'll tell you, kind of in leaving. You have the next, 6 months before you have to submit a single application, right? Use these. Time is actually an asset for you guys right now, class of 24. Use the time wisely. Start to build a school list that makes sense, not only from an academic perspective, although obviously that's very important, right? An academic cultural perspective, but also start to get a handle on the finances of these different schools, right? And again, the goal for every family should be best school possible for the best value possible, right? And marry those two things together. Guys, that's going to be different for every family, right? Because again, very family specific, right? And then very school specific, right? You want to, as best you can, marry those two things. Hopefully we give you some resources here. Again, the MyCap software is completely free. The consultation is completely free. Take advantage of it. This will not last forever. So take advantage of it, jump on it. And once again, thank you very much to your guidance counselor, to your guidance staff. Tremendous job they do over there. Thank you very much for having me. Hopefully, I know we ran a little long, but hopefully everyone had fun, learned a lot. And like I said in the beginning, if I did my job properly tonight, you guys have a much better understanding and idea of how the process works and how to really position yourself and your family and your child to get the best bang for your buck, right? Listen, and last thing here, because I can't help myself, don't be in a situation where you're taking on astronomical amounts of student loan debt, right? The student loan forgiveness, whatever you think about it, however you feel about it, take it as a warning sign and don't put yourself in that situation. For better or worse, this process, going to college is an investment, right? And we don't like to think of it because it is an emotional topic. Our kids, absolutely, but it is an investment. And at the end of the day, you got to ask, is it worth it? And that answer is going to be different for every family. Do the best you can, be an informed customer, be an informed consumer as you go about this process. You can't see the link in the chat. It should be in there. If you don't see it, oh, you're right. I didn't. Here we go. There's the link. I just had it for panelists. That doesn't help. All right. Yeah. So ED. So I'll hang out. I love this stuff. Okay. So ED, right? If you apply ED, one, the admissions rates are definitely higher, right? It was always true, but in the wake of COVID, that's one of the test optional and ED admission rates are the two lasting effects of COVID. You definitely have a better chance of getting admissions, ED. It does not affect merit aid at all. I apologize. It does not affect need-based at all. Your EFC is going to determine if you get need-based aid at that particular school. Do they give merit? Yeah, absolutely. Does it affect the chances? Maybe, right? I tell you, it depends on the school, right? A lot of times, most families are applying to schools that don't give merit anyway, right? So one, determine if the school does, but will they give merit aid? Absolutely. And some schools have a merit aid deadline where in order to consider you for the top awards, you have to get the application in by whatever it is, November 1st, 15th, December 1st. So ED, as long as you're prepared to pay the cost. And again, if you're going ED, understand the cost and what the expectation is financially, but can you get merit aid ED? Yeah. Again, some schools give it more readily than others. What else we got? All right, great job. All right, thank you. If it's your father's, it's your father's. All right. All right, guys. I really appreciate you guys asking tremendous questions. Thank you all very much for coming out tonight. Look out for that email tomorrow. Again, if you don't get it, you can reach out to anyone on my cap or feel free to hit me up directly. Again, there's my email, there's my phone. Reach out. And again, wish all you guys the best of luck. Everyone be good, be safe. Have a great night. Take care.